Bitcoin is got amazing distribution in terms of its ownership around the world. So if you say to yourself, if 50 or 60% of the people that currently own Bitcoin believe it's an asset class, will they continue to buy Bitcoin? Will they continue to hold Bitcoin? Will they recommend it as an allocation in portfolios? If that's the case, then $200,000 is too low for Bitcoin. Something like $500,000 would be there. So
when's $500,000?
Well, Kathy Wood says by 2030.
What does Anthony Scaramucci say?
I don't know. I'm not as smart as Kathy or Michael Saylor. I mean, they would say those numbers fairly quickly, but I would say that that could probably happen in the next 5 to 8 years.
Bitcoin has entered a period of consolidation since May 10th, with prices holding above the crucial $100,000 psychological level. The question now is whether the rally has lost momentum or if further gains are on the horizon. This pause in price action feels familiar, as we witnessed a similar consolidation around the $95,000 mark before Bitcoin surged by $10,000 in just 3 days. After roughly 11 days of sideways movement, the market saw a sharp breakout, suggesting that prolonged consolidation often results in more aggressive price movements. As always, conflicting views dominate the market. At times, there are indicators supporting both bullish and bearish scenarios, leaving traders and investors divided. Since bottoming out at $75,000 on April 9th, Bitcoin has experienced a remarkable upward trajectory, largely driven by activity in the spot market. Along the way, there have been periods of consolidation, where prices stabilized before pushing higher, signaling that this trend is far from over. This stair-step pattern is also reflected in the cost-basis distribution (CBD) heat map, which illustrates clusters of Bitcoin purchases at similar price levels over the past 3 months. These accumulation phases have consistently preceded upward price movements, with the most recent surge taking Bitcoin to a new high of $104,000. This shows that the market's demand for Bitcoin is steadily building, fueling optimism for the future. Anthony Scaramucci, a seasoned Wall Street veteran, offers his perspective on Bitcoin's long-term potential. While some crypto enthusiasts, like Kathy Wood, forecast Bitcoin reaching $500,000 by 2030, Scaramucci is more cautious, suggesting that it could take 5 to 8 years for Bitcoin to fully realize its potential. But the big question remains: will bulls continue to push higher, or will bears take control? Let's watch clips from Anthony Scaramucci's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
So August of 24 to now May of 25, there's a quantum shift in crypto. Yes or no?
Yes. Very different.
So
we will get it.
Very, very different, right? Yes. So a lot has happened and a lot of good things, frankly, have happened. But there's like a little bit of an undercurrent of some bad things. Can I address that just quickly?
Please.
So what I would say, and I want to be as fair as possible, because my crypto bros out there all voted for Donald Trump, and obviously I'm not a Trump supporter. They voted for Donald Trump out of almost like economic preservation. Some of them said to me, hey, the other team's trying to put us out of business. We don't want to be knocked out of business.
Right.
And at least you have to give President Trump credit. Good instincts, good political instincts. Let me just give a newsflash over here. There are no anti-crypto voters out there. Okay. Elizabeth Warren can set up an anti-crypto army, but guess what? There's nobody out there. So, why'd you vote for the person?
Right.
Oh, I voted for the person because I hate crypto.
There are pro-crypto.
Exactly. Okay. And so this is going to be a realization for everybody that there is no reason to be anti-crypto, but there is a reason to get the policies right, to get the regulation right, to create great clarity and definition on stablecoins, market structure, and to make the industry safe for the consumer and the investor, right? We all agree with that. But the undercurrent, unfortunately, is that, and this is the problem with the president, you get everything with the president. Okay, so you're at the buffet table. You can't go to the buffet at Mar-a-Lago and say, I'll take a little bit of crypto good regulation. I'll take a little bit of good banking regulation. I'll take lower taxes. I'll take a better SEC chairman. And then you walk away with your plate and you're done. No, you got to get the dinner rolls. And you got to get the meme coin activity.
Right.
And you got to get the Trump grab bag of World Liberty Financial and Melania Trump coin, Trump coin. And you got to get the 51st state rhetoric, and you got to get the potential attack, military strike on Greenland and the tariff war.
There's a lot.
There's a lot.
Okay.
But it's a force feeding. You can't do Donald Trump a la carte. You got to do Donald Trump with the whole meal. And so it's causing a problem in the industry, as predicted. When that meme coin was launched, I was in the World Economic Forum. Someone asked me about it. I said, well, there's going to be 60, 70-year-olds and unfortunately 80-year-olds in the Congress that are not going to like it. And they're going to slow roll the regulation. And we're seeing that now with the stablecoin regulation and the market structure regulation. But I am astounded, and I'll say this on very objectively, I'm grateful to the administration for ending the war on crypto. But let's try to dial down now some of the excesses. We're both searching for perfection, aren't we? If you had said to me in November of 2021, the futures ETF was approved by the SEC, we had an all-time high at that moment, at least. We've gone through that, but we had an all-time high. I would have said to you, okay, pursuant to administrative law in the United States, like a cash ETF and a futures ETF are relatively identical. The administrator would be arbitrary and capricious if they didn't approve the spot Bitcoin ETF. So therefore, we're going to have great ETF activity in 2022. That did not happen. Had a lawsuit, had to ensue, and they won the lawsuit, and they had to put it in place 2 years later. But I would have said to you back then, there's going to be an influx of institutional demand. And I would have been dead wrong. And so
2022 was
2022. So I want to be very cautious. I will say to you that the people here are nibbling. There are people buying. There are sovereign wealth funds. I think Mubadala said they have $500 million of Bitcoin, but they've got like a $2 trillion balance sheet. So
yeah, so it's like
it's like $50 for so it's not massive scaling yet. But here is what is happening. There's legions of people on Wall Street that are selling the idea to other people. And I do believe that we're having some breakthroughs, because in a month of April that I would characterize as chaotic and volatile for the overall global markets as a result of some decisions that the administration is making related to tariffs, I would say that Bitcoin had a fairly sturdy bid. And I would say from a correlation perspective, Bitcoin was slightly, if not more than slightly, less correlated to the Mag 7 or the NASDAQ, a result of which, if it's making a transition into store of value away from tech volatility, and we've seen the crossover point, that being April. I think we don't have enough data yet, but I'm just saying that's why I'm saying we're earlier than early. But if it's there, I think you're going to see an acceleration in demand for this asset. And I think you're going to push the prices to the price targets that we have at the end of the year. We're sort of like 150 to 200. So, and I've been, yeah. And but that'll also push up Solana. Other altcoins will gravitate as Bitcoin is the big kahuna, but the capital in Bitcoin does spill into these other markets. So again, listen, I've been humbled by life. I've been humbled by markets. I could be dead wrong. You can invite me back and dunk me in the town square if I've got it wrong. But I do think because of the regulatory framework, which I am giving the Trump administration credit for, and because of the ETFs,
right,
and what I know about Wall Street, 39 years on Wall Street, we are a selling machine. We go out with a story and an elegant PowerPoint, and we pitch this thing. Okay, Wall Street is one part parakeet and one part woodpecker. So hear me out for a second. We can repeat the same story with great enthusiasm ad nauseum, like a parakeet. And we can get up to the side of your head and we can peck at your brain like a woodpecker until your skull cracks and you finally say, okay, I'm tired of this guy. I'm going to take a 1% position in Bitcoin.
Fine, I'll do it, yeah.
Right. So, I mean, that's happening and it's working. This is sort of a weird industry because what typically happens is institutions come into something. They are the early money for Microsoft. They're the early money for Apple Computer. And then the company goes public and then the retail investor participates in the public offering after the institutions have made some level of economic rent early stage. This has been the exact opposite. The retail investor said, wait, whoa, this is a mutable asset. This meets a lot of the characteristics that we like of a store of value. Can the world have a digital store of value? Well, the answer is yes. If you're spending 5 hours a day on your phone, that's roughly 25% of your day, or 20% of your day. So therefore, could there be a digital store of value? And the marketplace has answered that by giving Bitcoin almost a $2 trillion or slightly over $2 trillion market capitalization. So I guess what I would say to that person listening, you bought in. Some people probably thought you were a dummy to buy in. I know people thought I was a dummy to buy in. You bought in, but it turns out that you bought into something that's actually working. And this may be first time in a long time where the retail investor got there ahead of the institution, and the institution is coming in very skeptical, and the institution is coming in with a tremendous amount of research, and they're not coming in to speculate. And I think if you see an institution like the state of Wisconsin, Mubadala, Fidelity, they're buying because they see it as a digital store of value. They're buying because they see it as digital property. And I would want to give people listening to your podcast some comfort that the things that they probably wouldn't know, that I know, that when I'm in these meetings, the due diligence is rigorous. The due diligence is non-speculative. The due diligence is grounded in a long-term investment thesis. So these are people that are not buying Bitcoin for a trade. They're not buying Bitcoin for a 2-month price target. They're buying Bitcoin for a 5-year allocation.
The past 9 months have shattered the crypto playbook. While Wall Street slept, retail investors struck gold, Trump turned crypto advocate, and Bitcoin flexed its digital gold muscles. This tension between digital gold and tech stock mirrors the market's cycles. Bitcoin often sees initial bullish surges followed by consolidation, which sets the stage for the next big move. For example, after the first jump from $75,000, Bitcoin traded between $83,000 and $85,000. The next leg higher stalled between $92,000 and $96,000. Now, since May 10, Bitcoin has oscillated between $101,000 and $105,000, marking another phase of consolidation. To push past this level, bulls need to break through a wall of sell orders around $105,000. Multiple sources have confirmed over $50 million in sell orders lie at $104,800, with an additional $70 million at $105,000. According to Anthony Scaramucci, this creates a formidable resistance zone, and if Bitcoin can surpass this barrier, the path to new highs could unfold rapidly.
I would say most people that I've talked to are saying that the halving cycle for Bitcoin is 4 years. We'll take it 25% longer than that, and we'll review it at the end of 5 years. Maybe we'll pair the position. Maybe we'll add to the position. But I think 5 years is more than a market cycle amount of time. It is done, and I think in our society right now and in the investment culture in our society, that's fairly long term. It's not Buffett. I'm going to own American Express, and I'm going to basically run the portfolio using a Ouija board 50 years after I'm dead. It's not Warren Buffett, but it's a long enough period of time in an asset like this. If you said to me that Microsoft was going to go 100 to 1 or Google 80 to 1 or pick whatever the numbers are, if you look at the charts of Google or Microsoft, or they're going from zero ideas in a garage to several $1 trillion, and NVIDIA, I think it formed it at a Denny's table.
It was something,
right. And now it's a $3 trillion company. If you said to me that those things would happen, they're very improbable things. So Tesla is an improbable story. SpaceX, an improbable story. So we can't say that these things don't happen, right? We have to say, okay, these things do happen. And then you just have to ask yourself the following question. And then there's a binary move after you answer the question. Is Bitcoin an asset class? Is it an asset class? If the answer is yes, then I believe, therefore, it should trade to the market capitalization of gold. It represents an asset class. That means that a portfolio consultant will go to a large-scale institutional investor and say, you need to allocate to gold. You need to allocate to Bitcoin. NVIDIA, Amazon, these others are investments. They're stock investments. If Bitcoin's not an asset class and it's a collectible, okay, whatever you want to call it, then where it's priced now is probably reasonably to fairly valued, meaning it's going to be in or near the Mag 7 in terms of its market capitalization. Mm-hmm. And so I've taken the position, rightly or wrongly, and I can back it up, I think, with a lot of color and a lot of commentary, that it is an asset class. And it's very unique in the following respect. It's a global asset. If you look at American companies or the S&P 500, yes, people around the world own them, but they're predominantly owned by Americans. Mm-hmm. I'm a realist. A lot could go wrong. If you're telling me that the Indian-Pakistani conflict spills into a greater theater war, there's more theater activity in Europe. Mm-hmm. There's a potential problem in Asia. A lot of unpredictable things. Now, all those unpredictable things, Bitcoin could shift to, hey, let me sell my Bitcoin immediately, or it could shift to, hey, I want to own more Bitcoin. What I do find that on the weekends where there's bad news, because Bitcoin is the only market that's open, Bitcoin trades more. You know, you can see bad news, all of a sudden Bitcoin's trading down. You're like, okay, someone's looking for liquidity in their portfolio because they think they're going to get dunked on Monday, you know. But if these markets tokenize, Jack, and they end up, 24/7 markets, that'll obviously be, in my opinion, it'll be better for Bitcoin. It'll be going to mean less volatility for Bitcoin. Yeah. Right now, if I buy a stock from your account, let's say you put up your Citigroup shares for sale and I'm going to buy it, it's going through 7 different entities and the Depository Trust Corporation before it ends up in my account. Now, when I got started in the business, it was T+5. It took 5 days for that to happen. Now it's T+1. Yeah. But you and I both know that over the blockchain, we can do that T+a minute, right? Do it lower. Solana, we can do it T+30.
You can send me some Bitcoin and I'll say thank you. And
I could do that. And somehow I think I would never get it back. So I gotta be careful around you. I have my phone. Yeah, but my point is that not only do I think that's going to happen, but I think it's going to happen and it's going to reduce costs and it's going to reduce friction in the marketplace. So that's going to be good long-term for the market. And I would make the argument that 24/7 markets, where we've been resistant to this, we've had the ability and capability to do this forever. And we do have overnight trading that's off market and we have after hours trading that's off market. But if we had 24/7 market-based trading, I would make the prediction is that would calm people down, would make the thing less volatile because people would know, hey, it's 10:30 at night. If I needed to sell it, I'd sell it. Yeah. Okay. And they would size themselves appropriately. I think there's a lot of activity and there's a lot of buzzy announcements that are being made. And I agree with all that, but I don't think there's going to be a quantum move until you get clarity from the U.S. government. If you tell me we have a stable coin bill passed, signed, sealed, and delivered, you tell me we have a marketplace deal passed, here's all the guidelines, signed, sealed, and delivered. And let's say we do this by the August recess. There's people smarter than me that think we can get it done by the August recess. So I'll accept that. But I do think it gets done before I'll make this prediction. It's not as bold as the August recess, but I do believe you're going to get those 2 pieces of legislation passed before April of next year. And the reason why is I don't think anybody wants to go back in their districts and start a campaign, which they're going to have to start, and grind it out to November being anti-crypto. Okay. I mean, if you're Elizabeth Warren and you own the state of Massachusetts, maybe you can get away with it. But most of these other people are not going to want to do that. They're going to have political action committees like Fair Shake. They're going to have other people in the mix. They're going to be supporting pro-crypto people. And so why not be able to go back to your district and say, yeah, I voted for stablecoin legislation. Don't come after me. Okay. So it may not happen by August, but I do think it happens by April. That's my prediction. And I would say to you that the question you just asked me, if you have stablecoin and marketplace clarity, then you're going to get an exponential move in activity from these institutions. People are ready.
100%. They're just waiting.
They're waiting. But they're not going to do anything until we get this clarity, in my opinion.
The Bitcoin price debate just got a major gold standard upgrade. Fresh analysis suggests Bitcoin could realistically hit $220,000 in 2025 and potentially $1 million by 2030 if it continues mirroring gold's market behavior. This power curve model, tracking Bitcoin's value in gold ounces rather than inflation-prone dollars, reveals striking patterns. Every cycle accelerates Bitcoin's gains, with this bull run potentially delivering unprecedented returns. As gold flirts with $3,500 per ounce, Analysts note Bitcoin's delayed but amplified reaction could spark a fireworks display. One projection shows Bitcoin capturing just half of gold's future market cap would value it near $924,000, a digital gold narrative that aligns with Anthony Scaramucci's long-term institutional thesis. The catch? Timing. While the 4-year cycle crowd expects 2025 fireworks, skeptics await regulatory clarity, a hurdle Scaramucci emphasizes could make or break institutional participation. Yet with Bitcoin already decoupling from traditional markets during crises, its 24/7 trading proving more resilient than stocks, and Wall Street's woodpecker-like ETF pitches wearing down skeptics, the stage is set for a potential supercycle. Whether Bitcoin hits $220,000 or $444,000 this year, one truth emerges. The asset class debate is over. The only question left is how fast traditional finance will acknowledge what the power curve already shows, that Bitcoin isn't just chasing gold, but rewriting the rules of value itself. As we wrap up, do you believe Bitcoin can overtake gold's market cap by 2030? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.